Coming to you from the floor of the CME Group, I'm Eric Wolfman Wilkinson. It's Wolfman Wednesday, March 14th. Let's get in the zone, the cash money zone. Well, what's happened since we last saw each other? Well, we had the FOMC minutes, and like I said, they didn't say anything about quantitative they didn't say anything about any more quantitative easing. Why? Because prices paid. That's right, prices paid are starting to go up. They said that they think that it's just temporary. They really only mentioned gas. They didn't mention these other commodities like grain. Grains are all starting to rise, so all of that has upward pressures. We saw that in the U.S. import-export prices today. Prices have dropped a little bit, other than the fact of the petroleum prices have really gone through the roof, and they even mentioned the ags have gone up. So those are the prices you're starting to see, the commodities that we eat, the gold that you can eat, corn, all those prices are going up, the things that you use every day, the gas going up, against your house going down. That's why the prices are leveling out in the price paid number, but they noted these higher commodity prices. Now, on to what we have going on in here. Today we're starting to see the commodities start to slip. They're finally starting to realize that the dollar's been gaining strength over the past couple of days. So commodities are starting to fall. We saw crude go below that $106 a barrel level. We're trading right below that right now. That's pretty key. We're starting to slide off. I think we might start seeing that trail off here in the corn. Corn really spiked up yesterday, but we're also seeing a correction today, down 4 cents. At one point we were down 5 cents. We're seeing a bit of a dead cat bounce here off the bottom, but looks like we're going to start migrating a little bit lower, just to counterintuitive or intuitive to what the dollar is doing. All right, take that. Anyway, on to the numbers. Bond resistance, we're well off that. My first resistance is 140, 114, way up above. We're actually trading down below the pivot area of 140.28. But my first support for you is going to be 138.02. These bonds have really started to fall out of bed with this equity rally yesterday. Corn in here, I got 660 is basically the pivot right now. We're trading right below that pivot, 658. 656 is my first support. Below that, 644 we've been talking about forever. They could migrate to see that level here pretty soon. On the upside, I've got 672 for the resistance on the corn. Take that. S&Ps, we've been talking about it forever. We're popping up. I got the pivot, it's 1363, we've been talking about that forever, but on the upside, 1398, I talked about it yesterday. We've tested that level a couple of times overnight and coming into today. If we bust through that, 1407 and then 1425 is basically my next resistance on the upside. It's looking like equities are getting a little toppy here to me. It looks like the chart's starting to print it out. Today's going to be key, today and tomorrow, for confirmation whether or not this is in fact the top or just a pause on the upward trend that we've been seeing in the equities. All right? You can't take that, take it easy.